Wealth creation is not a straight line. In the beginning, every dollar feels like a mountain to earn and a drop in the bucket when saved. You grind, save, invest, and often feel like progress is painfully slow. But then something changes. When your net worth crosses the $100,000 mark, growth stops feeling like you're dragging a boulder uphill and starts feeling like it's rolling downhill with you guiding it. Here's why this happens and why it changes everything for your financial life. 1. Compounding finally becomes visible. In the early stages, compounding works, but it's microscopic. A 7% return on $5,000 is just $350 a year. It's not life-changing and it can feel discouraging. But at $100,000, that same 7% return is $7,000 a year without you lifting a finger. That's over $580 every single month your money is earning for you, like a silent employee that never sleeps, never asks for time off, and never complains. The beauty here isn't just the math, it's the momentum. When you hit 100K, your investments are finally big enough for compounding to be emotionally satisfying. You start seeing four-figure growth in your portfolio, even during months when you didn't add a dime. This is when your brain shifts from "I'm building savings" to "I have a wealth engine running." At this stage, every market gain, every dividend, and every interest payment reinforces that the game is winnable. That burst of belief creates motivation to protect and grow your money, which fuels even faster progress. 2. You transition from active effort to passive momentum. Before 100K, the bulk of your net worth comes from your work, your salary, side hustles, or extra hours. You're trading time for money, and the clock runs your life. After 100K, the ratio begins to flip. Your investments start contributing a larger percentage to your annual wealth growth. The difference is subtle at first, but massive over time. Instead of feeling like you're always starting from zero every month, you feel like you're starting from $100,000 plus growth. That's a completely different financial and mental position. This shift reduces money stress. You begin to realize you don't have to grind forever to see progress. You can take a weekend off without guilt, knowing your money is still working for you in the background. 3. Losses hurt less. Gains hit bigger. When you're starting out, a market drop feels devastating. If you have $2,000 invested and it drops 20%, that's $400 gone, a big chunk of your savings. But once you've hit 100K, the game changes. Yes, a 20% drop would now mean a $20,000 paper loss, but here's the twist. By the time you have 100K, you've usually built the emotional resilience and investment discipline to see volatility as an opportunity, not a disaster. You know markets recover. You know compounding thrives on patience. And you have enough capital that even modest recoveries produce big dollar returns. The confidence that comes with having a six-figure cushion changes your reaction to risk. Fear is replaced with strategy. You're no longer just protecting money, you're leveraging it. 4. You can take advantage of bigger opportunities. Before 100K, you might not have had the capital to jump on certain opportunities, real estate down payments, angel investments, or even bulk purchasing for a business venture. Once you have 100K, you're in a different playing field. You can take calculated risks that can multiply your net worth far faster than small-scale moves. This isn't about recklessly throwing money into random ventures. It's about having enough capital to participate in high-return opportunities that smaller investors simply can't access. Opportunity breeds confidence. Instead of watching big opportunities pass you by, you can step in, act decisively, and reap rewards that others can only dream of. 5. Your savings rate becomes a rocket booster, not the engine. When your net worth is low, your savings rate is the primary driver of growth. Every dollar saved is a direct percentage of your net worth, But after $100,000, compounding takes over the heavy lifting, meaning your savings rate becomes an accelerator rather than the engine. If you save $20,000 a year and your investments are growing by $7,000 to $10,000 annually, you're adding $27,000 to $30,000 in total net worth every year. That's when doubling your wealth stops taking decades and starts happening in a few short years. You feel a sense of momentum that fuels discipline. It's no longer about depriving yourself to save more, it's about watching the combination of saving and compounding make your wealth snowball at high speed. 6. You can invest more aggressively if you choose. Before 100K, many people invest conservatively because they fear losing what little they've managed to save. After $100,000, the mindset shifts. You have a strong financial base, which allows you to increase risk exposure in a calculated way, potentially unlocking higher returns. For example, you may start adding growth stocks, index funds with more volatility, or even exploring small business ownership. You have the financial flexibility to ride out downturns without panicking. There's a powerful sense of freedom in knowing you can afford to take calculated risks without jeopardizing your financial stability. This freedom leads to better, bolder wealth-building moves. 7. You gain psychological leverage over money. Money anxiety controls people when they have very little. Every unexpected bill feels like a crisis. Every market dip feels like a personal attack. But once you have 100K, you're operating from a position of financial power rather than survival. Psychologically, this changes everything. You negotiate differently, you handle setbacks better, and you think long-term instead of just trying to make it to next payday. You feel secure. That security frees mental energy for creativity, opportunity spotting, and making smarter decisions, the very qualities that build more wealth. 8. You cross the threshold of money working harder than you sooner than you think. Here's the ultimate secret. Once you have 100K and continue saving, investing, there comes a point where your investments add more to your net worth each year than your job does. That's when wealth building truly skyrockets, because you're no longer dependent on your labor to get ahead. Your portfolio becomes the main breadwinner, and you become the manager of your wealth rather than just the worker for it. This is the first taste of financial freedom. Even if you don't retire, you know you could, and that knowledge changes the way you live. At its core, the magic of hitting $100,000 is rooted in the math of compounding. When you have small sums, the growth rate looks impressive on paper but underwhelming in dollars. A 10% return on $1,000 is only $100, barely a week's groceries. But at 100K, the same 10% return is $10,000, which for many people equals 2 months' salary earned without adding a single extra hour of work. To see the difference in scale, if you invest 100K at an average market return of 7% annually, historical S&P 500 average, and add nothing more, you'll grow to $107,000 in year 1, $140,255 by year 5, $196,715 by year 10, $275,903 by year 15, and $386,968 by year 20. Add just $1,000 per month to that same portfolio, and it jumps to $119,574 in year 1, $206,162 by year 5, $399,084 by year 10, $682,654 by year 15, and $1,146,804 by year 20. The leap is dramatic because compounding accelerates with scale, dollar amounts start small, but as the balance grows, those same percentage returns produce life-changing sums. At $100K, your portfolio is finally big enough to grow itself meaningfully, producing gains that can fund major expenses or other investments without ever touching the principal. Capital opens doors. With $100,000, you suddenly qualify for opportunities that were previously out of reach. In real estate, it can be a down payment on a rental property that generates passive income. In investing, it can give you access to private equity, higher minimum mutual funds, or exclusive investment platforms. In business, it can fund inventory for a product launch or buy into a franchise. Even in the stock market, 100K means you can diversify meaningfully without sacrificing returns. You can allocate into growth sectors, dividend plays, and even some speculative positions without endangering your whole portfolio. You can dollar-cost average into downturns in a way that's impactful. These opportunities are not just about making more money, they're about multiplying it faster. Wealth building accelerates when your capital works in environments where the upside is large and the entry barrier is high. The 100K milestone puts you in that tier. The journey to 100K is the hardest part of wealth building because it's slow and often discouraging, and getting there faster requires a high savings rate, aggressive income growth, and disciplined investing. The first step is to maximize your income early by focusing on skill acquisition and career moves that significantly boost your earning power, since a 10K salary increase has a far greater impact in the early years than any investment return. Next, lifestyle creep by resisting the temptation to inflate expenses with every raise, keeping living costs stable while income rises, and directing the extra money into investments. Automating your investing is another key move. Set up automatic transfers into index funds, retirement accounts, or other vehicles to eliminate the need for constant decision-making. On top of that, leverage side income streams such as freelancing, selling digital products, or running a small online business, and commit 100% of that extra money to your investment accounts. Once you reach 100K, the fastest way to break past it is to stay invested and let time do the heavy lifting, resisting the strong temptation to pull money out for big purchases, because the first 6 figures form the foundation that allows compounding to accelerate your growth. A flywheel is a heavy wheel that takes enormous effort to start turning, but once it's moving, it spins with minimal input and builds massive momentum. Wealth works exactly the same way. Before 100K, every push, saving, investing, budgeting, feels exhausting because the results are small. But after 100K, the momentum shifts. Your investments produce returns. Those returns get reinvested. The new capital produces even bigger returns, and the cycle accelerates. It's not just financial, it's behavioral. Once you see the real impact of compounding, you naturally double down on the habits that got you there. You invest more consistently, you avoid stupid financial mistakes, and you start spotting opportunities to put your capital to work. That combination of capital growth plus disciplined habits is unstoppable over time.